What is going on YouTube? Hidden back making another brand new crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500 if we have time. So, where do we even begin? Don't you just love when unforeseen events that come out from the Federal Reserve ultimately impact cryptocurrency really freaking hard and ends up sending all the cryptocurrencies down, tumbling to the downside with 10% losses across the board? This was not something that honestly anyone expected. Yes, we were on the verge and on the brink of what could have been a pretty substantial break to the upside here. As you can see on XRP, we were tracking a massive falling wedge pattern that you can see here. And we've been discussing day after day that if we can close above this downtrend here, which had about maybe a day left from yesterday, we were discussing that there was really no more room for us to continue to trade sideways, and we have to make a decision as of yesterday as to which direction we move to. This was it, and we actually broke bearish. We had some pretty substantial information actually come out from the Federal Reserve that we do have to cover, which ultimately impacted high tech and high yield investments, high risk, high reward investments, which was cryptocurrency and tech stocks, which were all ultimately affected. So not only did we have crypto like XRP correct downwards, which actually recovered fairly well, but we also had things like Ethereum dump 13%. Ethereum got hit really hard. We have Bitcoin too, which corrected lower. We have to talk about that. But the real thing that got affected tremendously was the S&P 500, which actually fell at a pretty substantial rate pretty quickly from top resistance all the way down. We fell about 1.96%. Nothing terrible. You can see here that this was a resistance, and it almost seemed like we needed some sort of volume movement. So it only was a matter of time before we saw some sort of run. You can see we've had in the past here, this sideways consolidation on top resistance usually leads, or the price ceiling right here usually leads to a stumble or some sort of volume injection or removal. And here we are with the same problem trading sideways here. And here we have volume leaving. And once again, sideways movement. We had volume dip again and money left the market. So it almost made sense here, but we do have some pretty crazy stuff to talk about in regards to obviously stocks slump and treasury yields rise on fear of a faster Fed pullback, which is very important. And we do have to talk about, because not only is this going to affect cryptocurrency, it will affect everybody investing in tech stocks moving forward. That means Tesla, that means Amazon, that means Facebook, the Meta, that means Apple, any of those bigger investments that you have, and all the smaller tech investments after that will all be affected by what exactly the Feds are saying. So without further ado, guys, today's video is brought to us by FairSide. As you can see here, FairSide is a decentralized cost-sharing network, and it's insurance is what they do. The cover is what they do, and the cover protocol is designed and built by the community. So it's basically like next generation DeFi cover. It's basically DeFi insurance for your cryptocurrencies in case wallets are stolen, in case if you lose it, if you misplace it, stuff like that. You actually have insurance to cover it, which is really interesting. More information about FairSide will be at the end of today's video, which I definitely recommend checking out, as I have linked them down in the description if you want to check them out earlier. With that being said, guys, definitely make sure to smash the like button, turn on post notifications, and let's jump into today's episode. So guys, jumping into the current coin market cap, you guys can see here everything is down. Overall market's down 5%. No, refresh, 8.3%. There we go, even more. You can see currently Bitcoin's down only 6.9%. Ethereum really was the one that got hit, 11%. Solana's 11.6%, XRP's 8.4%. Everything moving forward is just down. Pretty much every single cryptocurrency across the board was affected. It wasn't just one crypto. Every single thing got affected, where everything is down double digit, 15, 20% overall. Not necessarily something we like to see, but it did happen, and it was by outside manipulation. And what really came out last night was information about this, or yesterday. You can see here stock slump, treasury yield rise on the fear of a faster Fed pullback. You can see U.S. stocks slid and treasury yields jumped on Wednesday, which was yesterday, after meeting minutes released by the Federal Reserve indicated that it might not only raise interest rates sooner than expected, but could also reduce its overall asset holdings to tame the high inflation, which is pretty pretty crazy because they also released information that they were taming back on buying bonds, U.S. bonds, in mid-December, December 15th, and that's when we saw another slide. You can see it was like December 15th was right around here. Actually, we saw a pretty substantial run to the upside here, but S&P 500 right around this area, we saw a big run, and then we saw information come out about the Federal Reserve, and it immediately corrected us down to the downside here. It released on the 15th, and then 3 days prior, or 3 days after, we just, slid all the way back down. So it wasn't necessarily a positive reaction and ultimately led to prices dipping lower. Now you can see here that the Fed's minutes from December released on Wednesday. So what they were talking about in December, the 15th, what we said, released yesterday and offered more details on the Fed's shift last month toward a more hawkish monetary policy. And policymakers agreed to hasten the end of the pandemic era program of bond purchases, as we know, and issued forecasts anticipating 0.75 percentage point rate increases during 2022, which we also knew that they had put out here, but they talked about it going even faster. And you can see what's interesting, it wasn't just cryptocurrency that was affected by this information in a more specific publication that came out yesterday. You could see it affected oil prices, as oil prices rose modestly even more on Wednesday, which was yesterday. So we're probably going to see gas prices even higher today moving forward than we did yesterday and the days before. You can also see here U.S. crude oil rose. You can see even more per barrel went up. Then the U.S. dollar fell yesterday because of the information that the Fed released. So that's great that the US dollar is now even weaker. We had cryptocurrencies, which got hit the hardest. Bitcoin fell about 3.5%. And then you can see that spot gold dropped about 0.3%. But US gold futures in the future actually went up, which was okay. But almost everything was affected negatively here, with the US dollar weakening, with oil prices moving up more expensive here. Not necessarily a good position for the US right now. And then moving forward, Ethereum got affected more so. It plunged 13% down, more than Bitcoin, after the Fed spooks crypto market. The only reason why I would think that Ethereum got affected more so is because there is more utility backed around Ethereum because of other more developed tech projects intertwined with this crypto here. And you can see that the US Federal Reserve released the minutes of their December meeting, showing that they eye a faster timetable for hiking interest rates, which means they want to do it quicker. That's the thing that came out, that they plan on actually doing these interest rates much quicker than they had projected back in December, only like 3 weeks ago. And the minutes showed that the Federal Reserve Open Market Committee, the FOMC, is in favor of raising short-term rates sooner or at a faster pace than participants had earlier anticipated, which is not a good sign here. So that is more information that I wanted to cover. They're talking about how we've been inside a falling wedge fractal here, which you can see we've been in this falling wedge slump, which was expected. And we also will talk about this on our falling wedge charts right here. And then they also discussed how there's a chance that we could actually see prices swing back up if we can break through this downtrend. They do have a downtrend drawn, not necessarily a falling wedge fractal here, which we can also align. You can see this being the downtrend here, going all the way back down to bottom support being at $3,300. So I'll show you guys that in a minute now. Moving forward, I do want to also talk about why inflation actually hurts high growth tech stocks, which would also include cryptocurrency being things that investors use as a place to beat inflation and have shown some pretty substantial gains over the course of the year. But you can see here, the key points is that inflation can cause a company's expenses to rise while reducing its pricing power. Rising interest rates, which counter inflation, will also reduce a high growth tech company's future earning estimates, and this environment is challenged for tech companies, but investors shouldn't avoid the entire sector. And you can see moving forward, don't avoid all tech stocks, but be selected. All of those headwinds are causing investors to rotate out of tech stocks and toward financial consumer staples and industrial companies, which often perform better in a stable economy with elevated interest rates. And it's tempting to follow that trend and avoid tech stocks altogether. However, there are still plenty of resilient tech companies that can withstand the inflationary pressure with their pricing power and stable cash flow growth. So it's interesting to see this, but usually when Feds actually start to increase interest rates, people start to flock out of tech companies as well as cryptocurrency being those two, it appears, and put them into more stable, more industrial standards in regards to stocks here. And that's why we're starting to see markets dip substantially moving forward. And lastly, the last article that I really want to cover with you guys is it says that stock market news live updates. Obviously, stocks drop and tech shares sink after Fed minutes hint at earlier liftoff on interest rates, which is crazy. So the stocks that are sold off Wednesday afternoon, with a slide in technology stocks accelerating into market close as investors digested the Federal Reserve's latest this meeting minutes suggesting a potentially quicker path towards raising interest rates, which is pretty crazy. I mean, we're already in the new year, and they had it by March here, so January, February, March, 3 months. They plan on doing it even quicker than that. That could mean by the end of this month, if not in February here. But you can say the NASDAQ composite slid by about 3.3% in its worst day since February of 2021 as a rout in technology stocks deepened. The S&P 500 dropped 2%, with the interest rate sensitive real estate sector underperforming alongside technology and communication services stocks. And you can see here, lastly, Treasury yields jumped to build on gains after moving sharply higher on Monday and Tuesday, which added pressure to technology and growth stocks valued heavily on future earnings potential. So all these ones that were valued on future earnings got affected quite substantially, causing them to be sold off and prices to drop. Now, jumping into the actual technical analysis here that I know you guys have been waiting for, we do have some unfortunate things that we have to discuss. Honestly, it's a waiting game right now, but for the cryptos that we did hold, after seeing the big run to the upside here, we did hit our stop loss on XRP and some of these cryptocurrencies, which got us liquidated and are currently breaking even right now. So now we have to pay attention as to what exactly is going on in regards to maybe putting in a short position here. Thing is, it's a very interesting manipulation that we saw the past yesterday here. It'd be nice to see how exactly we close on this weekly here before I entertain a potential buy-in for a short opportunity, because there still is chances of us reversing back up above our uptrend here. We're still above our weekly uptrend in regards to XRP, and until this is like rock solid and broken, then we can discuss moving forward with a short opportunity. But this is very short term, and if we buy in right now, there's a good chance we're going to swing right back up above this uptrend here. There's still over 3 days, almost 4 days left in this weekly candle here. So I'd like to see how this closes before we decide to throw our money in for a short position moving forward here. And that's hopefully what you guys have to understand. Yes, it's very unfortunate that XRP did break through its uptrend here, but you can see we're actually retesting a pretty substantial support. Not only do we have, you can see moving forward here, or moving back in the past, we have clear supports being retested. This is a clear resistance. Then it became a clear support, clear support. This has been a ton of retests here, actually. Let me just delete this real quick. And now you can see right here, more retests of support. And then previously, where the bottom was at point C, we're retesting this as a support as well. I really did not want to see prices actually break bearish from this falling wedge pattern here, but that's also why we didn't buy into this, and hopefully nobody else bought into this, because we've been saying every single day for the past couple of days, this consolidation here since December 29th, it's been about probably 7 or 8 days of this sideways consolidation, about a week now. We've been waiting for this to fill in. We needed to discuss how we were going to react with this top resistance here. And you can see, jumping to the 4-hour here, even clearer, that this was a very strong and solid falling wedge pattern, which tends to break bullish. But outside manipulation caused prices to dip lower. Even if it did, even if it didn't, if we still broke bearish here. So now we have to consider the possibilities of entering a short position if we see how prices continue to play out by the end of this week, because weekly charts indicate that we're still being withheld by a very solid support level on XRP, which you can see right here. This uptrend is still holding on very well, and we could easily swing right back up to use it as a means of support. So I'm actually not going to be shorting this crypto just yet. I'd like to see how we play out on point C here, which then could discuss whether or not we are going to be breaking bearish or continuing to break bullish. Everything really intertwines as whether or not this purple band is broken. You can also see there is a pretty solid downtrend forming here as well, which, if this is broken, could also cause a pretty substantial swing to the upside as well. So I'm going to leave that on here, and we have to come back to this. But moving forward from the other cryptocurrencies, it's unfortunate that we see this bloodbath right now. The downtrend on Ethereum that we're looking at, that this article talked about, was this. If we extend this downwards, you can see now with this downtrend and the bottom support here, we also have continued to break through this falling wedge. It's at this point we could just delete this because it's not necessary. Maybe draw something along the lines of this. This is more so the falling wedge that we're starting to see here. We're continuing to just scale lower and lower and lower and lower. So hopefully we can break it with this bottom support here, consolidate in and break out. We'll see how exactly that plays out. And lastly, Bitcoin breaking through its bottom support here. This is not necessarily the good sign. This is not a good sign. So we have to see how this is going to particularly entertain the price of this uptrend here. I mean, we could move it out like this. It's not that accurate, but you can see with this uptrend like this, we have to see how the weekly plays out. Like I said, we have 4 days of consolidation left. If we start closing below these major uptrends here, and Ethereum starts closing below its bottom supports, then we can anticipate prices to continue to dump. But we'll see moving forward in here. Right now, liquidated out of XRP and Bitcoin. Sometimes they're wrong, sometimes they're right. But ultimately this does happen, and we have to continue to let markets play out, and hopefully this market manipulation can become an outlier and we start to get back on track to head up higher. I know this was a long video, but that's pretty much the update for today. With that being said, guys, I do want to talk more about FairSide with you. I want to give a huge shout out to FairSide for sponsoring today's episode. As with all crypto projects, please do your own research and never invest anything you can't afford to lose. So guys, the insurance industry is over 200 years old, and it has evolved into a vital component of the global economy. And despite the rising demand for insurance, today's fragmented financial infrastructure faces significant challenges. Over 97% of cryptocurrency assets are actually not protected against unjustified losses due to events like smart contract failure or code vulnerabilities. Now, in contrast to this, users of traditional financial tools enjoy the protection of highly regulated institutions such as the Federal Deposit Insurance Corporation, also known as FDIC. And as a solution to this, FairSide, a cover protocol, is introducing a strategy proven in traditional insurance to all crypto users. Now, FairSide is powered by its native crypto token FSD, and it aims to offer crypto users the same benefits of insurance awarded to traditional finance through its decentralized cost-sharing network. And the protocol is working to advance the current insurance processes in crypto to provide much-needed protection for crypto investors. And what's unique about FairSide is that it decentralizes the conventional insurance business model, thereby distributing the risk and benefits without actually depending on anyone's centralized authority. And while other DeFi insurance methods require you to buy separate coverage for each crypto investment, FairSide enables you to protect your crypto investments with a single membership. And as a DAO governed entirely by its members, the network defines exactly the type of loss events that are covered. And currently popular concerns like smart contract failure, we have personal wallet exploits, stablecoin pegs, failed business logic, Oracle failures, rug pulls, exchange hacks, among pretty much all the other events are being considered by the DAO for coverage types. And keep in mind, FairSide covers losses by relying on principles built within traditional insurance models that have established over decades. Now, to facilitate this, FairSide has developed a unique model known as network staking. And network staking is a highly capital efficient model designed to lower individual staking risk and increase rewards, expanding over coverage options and improving the claim process. Now, normally what happens with other insurance protocols is that stakeholders' assets are permanently liquidated when the claims are paid, but with FairSide, contributors stake Ethereum in exchange for FSD, and the FSD is held in the contributor's wallet, and the number of FSD held does not actually change as losses are paid. And armed with a new staking approach, FairSide's utility as a cover protocol for crypto and DeFi space is unparalleled, and FairSide aims to grow in tandem with crypto adoption, DeFi, NFTs, and every other area of crypto innovation. Now, risk diversification is a cornerstone of their business to help build the most robust crypto community while also safeguarding their contributors. And also, the platform doesn't have any KYC requirements, and it also has a non-permanent loss model. So guys, FairSide aims to emerge as a better alternative to DeFi insurance protocols, focusing on the restricted cover offered in DeFi, all while providing everyday crypto investors the same protection they would expect in traditional finance. So guys, time will tell whether they achieve these lofty goals, but FairSide is undoubtedly a project to keep an eye on, and make sure to join their Telegram with the links in the description down below. Otherwise, huge shout out to FairSide for sponsoring today's episode. As always, make sure to smash the like button, turn on post notifications, subscribe, and I'll see you guys in tomorrow's video. Peace.